Welcome to Macro Hive Conversations with Bilal Hafiz. Macro Hive helps educate investors and provide investment insights for all markets from crypto to equities to bonds. For our latest views, visit macrohive.com. So greetings, Zar. It's great to have you on the podcast show. So welcome to the show.
Thank you very much, Bilal.
Now, before we go into the meat of our conversation, I do always like to ask something about the origin story of my guests. So why didn't you tell me what you studied at university and how did you get your start in finance? And then we can go from there.
Okay, I studied a further maths degree at university, and I saw a lot of. And I was actually doing a postdoc in maths, and I saw a lot of my students going off to the finance in the city, earning 4 or 5 times as much as I was earning, and I thought maybe I should apply. And so I went in through. I was one of the first financial quants in the whole derivatives space. So I was hired by JPMorgan. Participated in their training program, and then became a quant/swaps trader.
Okay, great. And you did maths and a postdoc in maths. That presumably implied that you were into maths to actually decide to do further studies in maths.
Yeah, yes. It was a tough decision for me to kind of leave research because I was just fascinated by it. But the one thing that I really appreciated about finance was effectively the concept of mark to market. Right, in research, you get mark to market. After 30 years of research, right. In finance, you get mark to market. With your P&L every day. And I think that was, the thing that attracted me about the more immediate nature of, performance and, and being in a frankly more competitive environment appealed to me. And
then this was around the late 80s, early 90s that you entered finance. Is that correct?
Yes,
so what was the landscape like for quants? I mean, the whole quant area, was that new? How was it developing? What was the landscape around then?
Yeah, it was really fascinating. It was fascinating. The focus was very much on derivatives and structured derivatives. Black-Scholes had been published 20 years earlier. You had the advent of at the time some workstations which could run Monte Carlos and stuff like that. So there was this whole kind of approach around asset liability management, the whole derivatives side. But quants were never really, they were respected, but they weren't kind of like they were almost like the trading assistant, the trading assistants. They weren't the core of the business, right? Which, 30 years later my last firm is, the end of the cycle, of the cycle, right? Which is, I saw this whole rise in quants and the power of quantitative finance, but that wasn't, commensurate with effectively quants running, business lines, right? They were always, they were always the assistants or the adjuncts to the business, rather than a proprietary trading firm or an algorithmic trading firm where they are, the core of the business. They are the business.
And when I first had the pleasure of working with you, that was around the early 2000s, and you were running eventually to run, and you were running foreign exchange at Deutsche Bank. There's two things about that. Number one, foreign exchange, as within any investment bank, always has a certain reputation, where it's always, again, it's like the adjunct, it's the or a cousin, so to speak, within the family. Often it's viewed in that way. And then secondly, Deutsche Bank at the time, when you were taking over foreign exchange, Deutsche wasn't a number one player in FX at that time. It was trying to become that. So Can you talk to those two things? One is how was foreign exchange viewed, within the investment banks in general, and the related question: why did you go into FX or switch to FX? And then tell us something about the state of Deutsche Bank FX at the time.
So I think it was the theory of competitive advantage, right? I looked at foreign exchange. I'd done the first quantum option trade in 1993, 92, and that involved FX derivatives. And I looked at foreign exchange, and I thought, there's not many smart people here, right? and there was, it's a big it's a big market. So Deutsche Bank was a really interesting experience because I was hired, and we had to build the firm from scratch. And I say this is I'd come from a firm where some workstations, you could run Monte Carlos, the salespeople, etc., had technology. When I arrived at DB, nobody had computers, right?
What year are we talking about there?
95, right? Okay. On the sales side, on the trading side, everyone had this standard product, and nobody had heard of the concept of us. Everything was marked at the money volatilities and those smiles. So it was an incredible transformation that we did, and the way that we did it was we actually said we can't solve the whole problem of foreign exchange. We'll do the structured derivative business first, right? So the structured derivatives business was a very customized, bespoke for clients. They valued that service, extremely well, and they were willing to pay the spreads that they were. These 50 basis points, 100 basis point type trades, and it was a very problem-solving, solution-orientated, a business. And then clients turned around and said, "You're really, really good at this. Can you do our more vanilla stuff, right? I.e., the vanilla option stuff?" And we said, "Oh, okay, let's do your vanilla option stuff, right?" And then they said, "Well, you're now doing all our derivative business, and we've done that by a combination of just rewriting the whole technology platform, putting these, structuring people in to, sit along sales side." Salespeople, so they could, have a dialogue of understanding the customer needs, and trying to create the relevant, risk return product for them, and eventually those kind of like structuring people became, advisory salespeople, over time because they had those relationships. And so that was the whole derivative side. And they said, clients turned around and said, "Well, okay, you're doing all this great stuff for us on the derivative stuff. Can you do stuff for us on, the cash side of the business?" And I think I was put in charge of the cash businesses in 1998. And there was this. I said, "Well, why don't we stick our prices on the web, right? And clients can just click, and it can go into the trading book." And that. The volume of kind of trades, that started going into the book, originally the human traders was like, grew exponentially. And we said, okay, this isn't going to work. Why don't we, unless we scale up the number of traders by a factor of, 2 or 3. So why don't we just kind of like, put it into an electronic book and see whether there's any, internalization that could occur, et cetera, et cetera, et cetera. And that was the, foundation of kind of like both, Autobahn and also kind of like automated trading.
Autobahn was the name of the electronic trading platform at Deutsche Bank. That was the name.
Correct.
Yeah, Autobahn, German name, obviously. But at the time, were other banks also starting to do things electronically on the trading side in FX?
There were. In the late 1990s, I mean, I think, people like Dresdner and Goldman Sachs. Goldman Sachs had a product called WebET. I can't remember the name of the Dresdner product. I think the real innovation that Autobahn did was one-click trading. It's like Amazon, right? it was kind of like click and you're done. You're done. And the back end of that was a great client experience. And the back of that was our the way that we managed risk electronically.
Yeah. And then when you started, when Autobahn started or electronic trading started in say 2000 or whenever the early 2000s, where was Deutsche Bank FX ranked in the league tables market share?
Well, so we kind of like we went from 95. I think we were ranked 22 in the industry, and by 2000 we were ranked number one. So it's a very, very rapid rise through, the core of Essence was using technology, right, both on the derivatives side and on the cash businesses.
And then what were some of the challenges when you have so much volume going through the electronic trading platforms? What becomes a stressor at that point when you're having to manage all of that?
There's kind of obviously your risk management becomes kind of like critical, and you're going into things that you have to manage. You had to manage risk in a different way to a human trader. And what we eventually did was kind of like set up various limits for the ebook, and then above those limits, the excess kind of like went into the human traders. So that was the first model that happened in the early 2000s. Over time, those risk limits got increased into the for the ebook, and actually the interactions between the human traders and the electronic traders, the balance shifted, right? Electronic trading was extremely useful to clients for a large number of small tickets, right? Whereas the human traders were probably better at much larger and tickets hundreds of millions, whatever, and managing that risk bespoke on a bespoke basis.
And then running the business, obviously over the 2000s, then you had to manage the human side of things, the human traders. So they saw these machines taking over. I mean, was that a challenge or?
Yeah, I mean, I think the thing was to educate people, right, on if you don't get on the bus, you're going to get run over by the bus, and but also give them the tools, to actually enhance their educational capabilities, right, around electronic and see it not as a kind of like a threat to their existence, but an opportunity for the firm. And so we moved kind of like voice traders into electronic trading sales, right? But there was a variety of challenges in the 2000s. One with the organizational challenges, right? But then there were things. If I look at like the global financial crisis, right? Things credit risk had never really been a part of the foreign exchange psyche. You didn't.
Yeah, I mean the trades are so short term. You shouldn't. There shouldn't really be a credit risk there. Yeah. Advent of kind of, I think we were one of probably the first firm that looked at CVA desk to measure the credit exposures of our portfolio, of the portfolio that we had, and hedging out that. And I think the other challenges were, as you alluded to, which is foreign exchange was viewed as kind of like, okay, we viewed it as smart technology, whatever. But one of the things I think the challenge in 2000 was integrating it into the whole bank. And foreign exchange is an ancillary business, right, to a lot of parts of the bank, whether it's transaction banking, right, whether it's the asset management side where you have
currency overlay mandates and stuff like that. So it was building up these, the investment bank doing M&A trades and doing deal contingents and things. So it was building up products that linked and were suitable for the rest of the firm, and integrating ourselves not on the periphery of the bank, but as a core engine of the bank's revenues and services to its clients.
And then, you mentioned the global financial crisis. Of course, after the global financial crisis, there was a huge amount of regulation that came into banking, and you then had to re-engineer the business to make it kind of regulatory friendly. And you, from what I recall, you were one of the leaders in the FX industry, sort of setting out a framework for that. So can you talk a bit more about what that entailed?
Yeah, there were, it's the one of the saddest things, right? Which is, there's obviously kind of like the libel scandal everyone knows about, but there was, within foreign exchange, there was the WMR fixing, and there were chat rooms where there were, inappropriate, collusive conversations taking place. Luckily, the firm that I was, involved with didn't have any of that because we were so electronically, heavily focused, and and thankfully the voice traders, when they were approached, said, no thanks, we don't need to, participate in these things because, we're already doing rather well. But I think it'd be fair to say that the compliance functions at banks were second-class citizens in that whole growth stage in between 2000 and 2010, and I just kind of like looked at it and said, okay, we along with a number of other firms were kind of like under investigation. I said, okay, you're innocent until proven guilty, but what can you do to make the firm's control culture, controls better? And we, things which are normal these days, like trade surveillance, communication surveillance, we put those in place, and we went to the regulators and said, we understand we're, the whole industry is under investigation, but this is what we're doing as a remediation plan. As I say, I think one of the proudest achievements is, the firm I was working at, DB, was, number one for a decade. And there were $13 billion worth of fines in the industry around foreign exchange, and DB got 350 for a group, located in Latin America, which wasn't part of the main foreign exchange business. So, I think that's a testament to the people, right? That. I was very fortunate to have working for me in the culture of doing the right thing, and some of the technology that we had built. Not saying it was perfect, but we kind of were, ahead of the game, and we had the desire to absolutely kind of like make things watertight.
Yeah, so like your career so far up until that point, so you were at the cutting edge of like derivatives in the 90s as that was coming into financial markets. Then you were the cutting edge of the integration of technology to trading platforms in the late 90s, 2000s. Then in terms of bringing the regulatory compliance up to sort of standards, and that was always on the sell side. So you worked at various banks on the sell side, notably Deutsche, but also Goldman's, Credit Suisse, JP. So you had this long career, and then you left to join XTX as the co-chief of XTX. So number one, can you talk about what is XTX Markets, and then why leave the sell side? You could have just stayed and carried on in different roles.
Yeah, look. So I think it was kind of like push and pull, right? You get to a level of seniority where. I think I was, managing like 700 people, I was responsible for a huge swathe of kind of like the fixed income business at DB, and all I was ending up doing was cutting balance sheet and spending 70% of my time firing traders in different areas for human misconduct, and all I wanted to do was kind of like build a multi-asset electronic trading business, because I thought that was the future. I was very, very lucky to partner with one of my ex-colleagues at DB, and it turned out to be, frankly, just frankly easier to do it outside a bank with its constraints. And one of the reasons why is great the thing that I've found about technologists is the really, really good technologists want to work at Google, Amazon, Facebook, and startups. They don't really tend to gravitate towards banking, right? Banking is kind of like a more safe career option, and nobody who's graduates in the top 2% from the top comp sci programs really considers that as the cutting edge, because they want to be in more nimble organizations. They want to be working with other people that are of their ilk, their caliber, and they don't want to have the hierarchy that that many banks do have. So there is a culture, a big cultural difference between technology firms and financial firms, and XTX is a technology firm that does market making, uses data science to forecast prices in the future, and then takes one side or both sides of the trade according to our forecast.
And I remember when I had a conversation with you when you at the early years of XTX, you told me a remarkable thing of how small the staff was relative to the volumes you were trading compared to a bank, where the number of staff to generate to work the same volume was so much worse. Can you talk more to that?
Sure. I mean, one of the things which I find is trading and technology are two very, very different things. You can have an average trader, and you can find a great trader will have 3 to 5 times his production. Technology, the difference is far more pronounced. You can have an average programmer and somebody who can program 100 times more efficiently, and it's that scalability of the efficiency and process which really enables you, if you attract the top talent, right? To and the other thing I think what we tried to do was created XTX. XTX was created as an automated firm, so not only on the trading side, but in everything that we did, from whether it's operations, finance, risk. We hired people with both programming skills and accountancy skills, or risk skills, or or operation skills, etc. So you just can have that scalability, and also a common language that the firm can talk, which is the different level of coders, but in general everyone can code.
Okay, yeah, I mean that sounds culturally very different from a bank, where the dominant culture is the traders and the salespeople and the technologists, even firms that talk about technology being very important to them. you never feel like the technologists are running the show.
And as I said, please, please point to, the CEO of any bank who can write a line of code themselves, right? And this goes back to the early days, right? Quants are very, very, and technologists are, important people, but they're not the central people in those organizations, whereas with algorithmic trading firms they absolutely are. And it's a huge cultural difference if the CEO could code and and have reasonably quantitative dialogues, and you base decision making around data rather than or I think this or etc.
And
it becomes.
Yeah, well, when I was looking at the league tables for XTX now, say in foreign exchange is number one in the world in terms of in FX.
Electronic on the electronic spot. I think we're top three, but we've branched out into equities, and we run the largest what's called systematic internalizer in Europe, making markets in European equities to clients. So yeah, it's been a fantastic journey.
And but so top three, you're non-bank. So I mean, what's in the secret sauce that allows you to do so well versus, I mean, surely JP, Deutsche, Goldman's, all these guys have smart algorithms as well. And I mean, what is there something fundamentally, I mean, of course, the talent, you said you guys have better talent probably on the technology side, but is there something else that makes it?
It's not only on the technology side. I think it's also on the quantitative modeling side, and the quant modeling side, and the use of kind of like, machine learning. And then, also, the banks have changed since the kind of like, the 2010s, right? Their ability to innovate. Innovation is viewed as somewhat of a anathema to banks, right? Not taking risks, and is and frankly not innovating is part of is something that, banks are unfortunately just emerging out of. So we've had we've been fortunate both in the regulatory tailwinds that we've had, things like MiFID, right, which broke up, banks had this bundled product, which was kind of like research, execution, all this sort of stuff. We had the whole tailwinds of both progress on computer hardware and also in terms of the underlying data advanced in machine learning and data sciences, and I think we're just able to be more nimble around those things.
And then how about competition in the non-bank space? I mean, the Citadel, of course, is a big player. There's Jump. There's obviously a number of others in Jane Street. How do you compete with those guys? Because presumably they have more of a similar philosophy to you in terms of technology first and invest a lot in hardware. Or I'm speaking more as an outsider here, so maybe correct me if I'm wrong.
Yeah, I mean, as I said, there's a spectrum of people that a spectrum of players in this space, and some of the firms are more, as you rightly have said, more infrastructure focused in terms of hardware, and perhaps kind of like more latency orientated. The model at XTX is definitely in terms of holding risk for meaningful periods of time, and we're more kind of like in the IP and the software development side of things. What's really interesting, I think, is kind of like each of these companies tend to operate in their various kind of like ecosystems, right? Citadel and its kind of like US equities and equity options, paradigm, jump, jump trading, perhaps the futures markets, etc. So, each of them have their own their own kind of strength, natural strengths, I think, from the research side.
And then, when you look at the buy side, obviously there's companies like Renaissance Technologies that have done incredibly well using machine learning and so on, probably at a higher frequency, like HFT sort of space almost, and there's a number of other players. Number one, when you're dealing with HFT type, accounts in general, that presumably is a bit of a challenge because it's like an arms race. I mean, they could.
Most of our kind of like most of the business at XTX is very much focused on exchange and on venue trading. The client business that we do, obviously, we define clients as people that we can have, sensible, two-way conversation with, and we don't need the high frequency trading firms as a core client base. So yes, we'll kind of like talk to regional banks, to asset managers, the hedge funds, but high frequency traders, who have different alpha horizons to ours, or which could clash, are not particularly our target client base.
And you mentioned you have all of this quant research, forecasting, and so on. I mean, did you ever think, or could you ever launch a fund based on that alpha? Is that, I mean, could that be a possibility? So become, you use the IP in a different way, you could say.
Certainly, certain funds have done that, and done that. It's not something that we've, looking at raising external capital is not something we've done, particularly, currently at XTX. But who knows in the next decade where things can take, where things can take. I think. But again, that would be a different type of regulatory overhead. So that would also need to be thought through.
So given your experience on the sell side, your experience at XTX, and I'm talking this in the sense of the outlook for the financial industry over the next 5-10 years. If you were running an investment bank today, I mean, how would you position or orient the bank for the next 5-10 years, given your experience?
I think there's kind of like things which banks will continue to do by themselves, right? There's advisory services, right, and corporate finance, wealth management, very highly personal, interactive things. I think on the market side, there's obviously basis transformation in terms of risk, which you need human traders for, large tickets. But there's going to be a whole slew of things where, frankly, technology can, do it better. And firms like that, ourselves, have kind of like demonstrated that. You can either approach it and say, let me spend the resources to kind of like, build this internally, or you can choose to partner. And I think there will be more and more partnerships occurring over time, simply because of the cost of doing this internally is so high. Is so high. So I think if I was there, I wouldn't view technology and fintech players as kind of like as disruptive. Disruptive competitors. I just say they are disruptive, and they'll be competitors in certain areas, but we can be partners in other areas. I think that's what I'd be looking at. I think there's whole slew of things that potentially will happen in terms of the operations areas at firms, around the use of kind of like blockchain technology and smart contracts, which will, start automating some of these, these rather cumbersome kind of like and integrated, procedures that we have in banking and securities, etc. So yeah, I think there's just enormous amount of finance is an industry that never sleeps in terms of innovation that comes.
Yeah, I mean, just on the partnership side, I mean, if I was running a bank, let's say second tier or third tier bank, I'd be probably comfortable to outsource lots of different things, but to outsource trading to a company like XTX or Citadel or whoever I'd feel uncomfortable, because it almost feels like trading is my core skill. But I mean, what do you say to that?
Trading was your core skill. They're just kind of like you can choose to compete with the large investment banks or the large algo players, and you'll just be irrelevant to your client. And there may be certain things that you may be incredibly relevant for. Let's take the hypothetical case. You're a Scandinavian bank, and you're in foreign exchange. Let's use that example. And your core competency is maybe the Swedish krona, Norwegian, Danish krona, whatever. It's hard for you to have a competitive advantage in sterling or Malaysian ringgit or whatever. So why have those as but equally well, your clients will have the occasional need to do that. So why not partner there, right? So it's finding out the focus areas that you think you can, you truly can be, globally competitive in, and the areas that you need to service clients are.
Yeah, and I guess it kind of, you need to have this shift in mindset that trading isn't about it's a technology in the end, or there's a big technology component to it, which it's not clear you as a bank have an edge in that compared to a technology centric firm. So yeah, point well taken. Now on in terms of ChatGPT and all these LLM models, I mean, there's a lot of fear out there at the moment that we've got AGI or AI is going to take over everyone's jobs and so on. I mean, what do you think about that? I mean, do you feel like we're at this new transitional point where like we're all going to get disrupted out of all of our jobs?
I've seen this in my 30 years of finance, of innovation always kind of like leading to that whole fear. But if you also kind of like look back in history, right, from the Luddites onwards, when the Industrial Revolution occurred, right, people were afraid of their job losing their jobs, and the answer is a little bit more nuanced, right, which is the jobs change, right, and the nature of what is expected at jobs changed, and these tools will be kind of like enhance productivity, right, for many of the jobs that we do, and take out, as technology typically does, the low value added, tasks, and that's no bad thing for kind of like people's development or personal satisfaction. So I'm not one of these doomsday things saying that we're going to be controlled by robots. I think we'll use it intelligently, and and it'll be a appendage, just like the mobile phones are. 20 years ago, people thinking, oh my god, hey, that's going to replace I don't know, the courier pigeon or whatever. It just makes things far more efficient.
Yeah, no, I hear you on that. Now you changed your role a bit at XTX. You moved,
and more interesting.
Yeah, more interesting. Absolutely. I was so at XTX, you changed your role recently, that you're moving kind of more into a strategic role and away from an executive role. So that presumably will free up some of your time, or a lot of your time. And so, do you have what's the next chapter in sort of the Zar Amrolia story?
I guess there is, I've given myself kind of like 6 to 9 months to actually get bored and think about what the natural tendency is to just rush into something things. There are some like formative ideas that I have. There's obviously some philanthropy work that I want to do and achieve, which I'm currently doing and very engaged on. There are things that I think I'm interested in terms of public policy, right? Around education, around economic and financial literacy, for example, and then and actually just kind of like spending time with people that I turn 60 next month, and just spending time with people that you care about and know. And I think that should be those three things are the the core of what I want to do. Plus staying healthy.
That sounds great. Now, a couple of personal questions just to round things off. One is, what's the best investment advice you've ever received from anyone?
I think honestly, the best advice is invest in what you understand. Right? It's very, very easy to kind of like hear the whispers and just join the bandwagon. But it rarely works out. Rarely works out. You can be lucky. I think you can dip your toes in and learn about things, but you understand that it's a learning learning process. So I think that plus having a diversified portfolio and thinking through how that portfolio reacts, in various, inflationary, non-inflationary, rate hiking, non-rate hiking environment would be, doing the scenario would be good.
Yeah. And the next question was, given our kids are university kind of age or ages, what advice would you give to youngsters who are leaving university to enter the job market? So kind of that early career phase, what would you tell them?
What would I tell them? I look at some of the people that are coming out of universities, and I look at them and just say I'm awestruck about their vision of the world, what they want to do and what to do. So maintain that sense of optimism. Work hard. Be a team player, and just learn. The wonderful thing about work is it's an incredible opportunity to meet really smart people and learn from them, and hopefully over time you can you too can kind of like contribute to the next generation's growth and development. So just enjoy it. It's a wonderful period in time.
Yeah, and I see you have lots of books behind you as well, so I have to ask you a books question. What are some of the books that really influenced you?
I knew you can ask me that, and I was trying to kind of like think, about books that influenced me. I think I can break that out into two types of books. One books that interest influenced me as a person, as an individual, made me think. And there's plenty of plenty of that when I was kind of like I'm thinking about, should I leave university and become an academic? I was reading Thomas Mann, Magic Mountain. It's kind of like, hey, this purist utopian view of and I have that. I think work-wise, the things that I've learned from, whether it's kind of Hull and White on the derivative side, or the elements of statistical learning on the the statistical side, but really what's influenced me is actually the people that I've been with and learned from, and that's that I think is and I'm very fortunate to have worked with some incredibly smart individuals in my career. So I'm sure that's not the answer that you were looking for.
No, that's great. I mean, that's a perfect answer actually in some ways. Yeah. So that's great. So yeah, thanks for that. I mean, I learned a lot from this conversation. We've known each other for years, and one thing I just would say is that I having worked with lots of different peoples in the business, I mean, I would say that you're definitely one of the most inspiring and definitely one of the more pioneering people I've ever worked with. Like every there's a conventional way of doing things, and you'd always pick. You wouldn't be afraid of breaking convention to do the thing that would be the future. So that's something I've always admired about you. So just thought I'd add that, and hence why I wanted you to come on the show as well.
Thank you, Bilal. Well, I was privileged to work with people like yourself, who trusted me enough to break those conventions and help me along them.
No, that's great. No, so thanks again, and good luck with everything for the future, Zar. Thanks for listening to the episode. Please subscribe to the podcast show on Apple, Spotify, or wherever you listen to podcasts. Leave a 5-star rating, a nice comment, and let other people know about the show. We'd be super grateful. Finally, sign up for our free newsletter at macrohive.com/free. That's macrohive.com/free. We'll be back soon, so tune in then.